Worst practices for the three-way match process in accounts payable or accounting can mean the difference between paying exactly what you owe and paying a lot more on your invoices. Sadly, these worst practices are all too common. The three-way match is the process that businesses use to ensure that goods or services they receive match what they ordered as well as what they're being billed for payment. This process helps to prevent errors and fraud and is a critical part of a business financial management. When best practices in this critical area are ignored, they can end up costing businesses hundreds of thousands of dollars or more. Stick around until the end when we discuss one practice many companies never even consider is a worst practice, and it actually is. Hey guys, I'm Mary Schaefer, founder of AP Now, the place where you go for all the latest business intelligence if you work in, manage, or have responsibility for the accounts payable function. Alrighty, let's get started. Worst practice number one, not doing the three-way match at all. If you take the approach, you get an invoice, you pay an invoice, and you just operate your accounts payable function like that, you're going to end up paying invoices 2 and 3 times. And trust me, there are a few suppliers out there who, when they realize this is what's going on, they'll send you many copies of the same invoice. Not only that, oftentimes you'll pay an amount that is more than you actually owe. So if you're watching this, you probably are not doing that, but I just wanted to include it because, unfortunately, there are some companies out there that's how they approach this. Worst practice number 2, when you get an invoice that is for a lower amount than the purchase order, and you think, oh, goody, we'll save a few bucks here, and you just pay the lower amount. No, that's a worst practice. And the reason for this is that, for the most part, your suppliers aren't stupid, and there's a reason that it's a lower price. Maybe they shipped a lower quality good. Maybe they didn't ship as many items as you ordered. There's some problem here, and you need to investigate what it is, because otherwise there can be a problem elsewhere in your operations. First practice number 3, when purchase orders are missing information, assuming you know what should be in there, because you've seen so many purchase orders like this before. No. You need to go back to purchasing, and you need to get them to put in the missing information, because sometimes what you assume will not be correct, and then you'll end up with either a problem later on or paying the wrong amount once again. Worst practice number 4, not having a process to periodically review stale dated open receivers and open purchase orders to determine if they are still valid, and if they're not, closing them out. You need to have a rigorous process in place to do this, because otherwise, if you just leave them out there, they can be used to facilitate fraud. And if you leave open receivers out there, you can end up with a state unclaimed property auditor claiming that it was unclaimed property, or again, it can facilitate fraud. Now, often there is a dispute within an organization of who should do this, and we can talk about that a lot. But the important issue is that A, it's done, and it's done with the proper controls in place. That you have 2-party sign-off, because you don't want anybody playing games there. Worst practice number 5, not having the appropriate internal controls throughout your entire three-way matching process. This can hurt more than many people realize. We recently did a video on that, which you can watch right now using the link that will appear momentarily on your screen on YouTube and is in the description below. As always, we appreciate your thumbs up, your comments, and your subscribe.